traders, welcome to the TMT stock market strategy video for Monday, May 23rd. Hope everybody enjoyed their weekend. Beautiful out here in the East Coast of the United States. Let's get right to it. Well, Friday we talked about one thing. We talked about a pin, a 205 pin in the spiders, and sure enough, guys, look at this, 205.04 before its short covering rally. And you could see we kind of ran up. Really no pullbacks. I mean, we really did nothing here on Friday. And remember, get used to it. Fridays are bad days to trade, especially coming into a summer month. Speaking of that, let's fast forward. We have Memorial Day weekend in the United States here. Friday kicks off usually the summer. Monday we are off. The United States trading is off. There's no trading on Monday. And we will be looking for some sort of a holiday reversal of what's to come. Now, we just started the week, so we really don't know if we're going to be rallying or we're going to be selling off. Who knows what's going on. However, let's talk about what we've been talking about. And our analysis work is that I am looking for some sort of a local top in the next week or two, either this week or next week, concluding earnings season. And I do believe that the markets are ready to take a bigger sell-off first before the markets were to gravitate to the upside. That does not mean that we're not going to get pops in between, but I do think that the markets are pretty ripe for a sell-off. Now, we have PMI numbers that come out today. Germany came out with their numbers. The UK overnight, they were better. But remember, retail sales is coming out also at 9 o'clock this morning. Pretty dismal retail numbers that have been coming out from the apparels and the Michael Kors and Nordstrom's, Macy's, what have you. Some of the brick and mortar retail is really not doing too well, and that's going to put a kind of slow things down a little bit. Now we're all coming into volatility, and we're going to see what happens here. We're going to take it one step at a time. I do believe that the markets are ready for a bigger move to the downside before we see the markets move up. But anyway, the pin 205.04, pretty good for government's work. I do like it on the monthly. Monthly pins are more reliable than weekly pins, just to let you guys know. And remember, guys, if you want to look at you want to learn this this art form, visit us at TMT website. Send out an email at support. Take a look at the videos we put out, premium videos for $49. We're putting out now also from a high demand of emails asking us for golden oil. We're putting out a bi-weekly golden oil report, very, very, very cheap. This is definitely going to help your trading. We put some actionable areas down there. If you like the free video, you got to see what's in the premium video. Very exclusive, very extensive levels to trade off of. All right, let's get to it. All right, now I want to see what we're looking at the NAMO and the NIMO, which is a good gauge of risk, right? And we want to see what's going on here. Let's see. Well, we got the zero line here, so that's neutral state, and we're pretty much there, right? We did get a bounce off here. I mentioned last week. Watch for a bounce. We did get that coming off of that Bollinger Band close on the outside, and now we're neutral. Why? So why do I want to see that? Well, if the market sells off, we got plenty of room to run to the downside before this reading becomes oversold, and or if we rally to the upside. Okay, so it doesn't give you direction, but it does tell you it's really good analyzing overbought or oversold. Let's take a look at the Mcclellan Oscillator. All right, same thing here. You could see here that we got into that 70. Oversold state, and now we're back into that 30. So we still got a little bit of room to run to the upside. And again, guys, I still see plenty of room either to go to the upside and or to the downside. Remember, it does not tell you a direction, but it does tell you if you're overbought or oversold. Let's take a look at the VIX, right? You see a lot of these indicators from me, but I really, there's a lot more work that goes behind the scenes. Too short for a 6-minute video. But I want to show you that the VIX actually closed out and then back in. Broke out and then closed back in, and then we had that nice little move right to the 20. Guys, energy is building here, okay? And we have some positive divergence, and I want to show this to you down below, and you can see that in the stochastics, and you can see it in the RSI. So we do have some positive divergence. You got to be careful here. This VIX is telling us something, and that's why I do believe that I think we're going to break to the upside, which would be a bearish signal for equities. Okay, so keep an eye on that VIX. Even if you look at, I like to look at the VXX. Keep an eye on that. Surprise, surprise. Let's look at the spiders. Guess what I found? Another pattern, bearish pattern to the downside. And what did I say? I said I hear too many people talking about a head and shoulders pattern. The pundits on CNBC, Bloomberg, what have you, radio shows, internet, all of these different venues. I see them talking about head and shoulders pattern. Not a good sign at the moment because it's going to be that much harder for it to break this neckline here. But what I did find is I found a descending triangle. Okay, descending triangle, which is bearish. Okay, measures pretty much right to 196. You take the mouth of the 2, all right, and then you take it to here, and then you project it where it goes, how many points, and it's right about here. So 196 is another bearish pattern. 2 bearish patterns, same target area, very reliable. I do believe that this should break. We are above the 50 now, so we need to get back below the neckline and below the 200 for a nice push to the 196 area. And that's logical, right? We're at that 50% retracement, so this is what I'm looking for. And if it's really a healthy market, it should not break below 50, even 61.8%. Let's call it 193, okay? It should not break below this area here. If it does break below it, we're going to see a deeper downside correction. Right now, we don't know. Let's let price tell us which direction it wants to go. It might even challenge the highs before we go lower. So that's why we want to keep always our pallets dry and ready to rock and roll when price tells us, okay? So another bearish pattern, guys, a descending triangle and a head and shoulders pattern, still valid, has not broken yet, okay? Take a look at the Russell weekly, the transport weekly. Want to show you that this head and shoulders pattern here is still valid. We did get support break on that 118 that did hit, but the head and shoulders is 108.50. So we're still looking for that. You could see here a lot of chop. We're back below the neckline here on Friday. We closed right at it. We need to get below that 200 for that target move lower, okay? So still looking good, still valid, but again, bearish patterns are still upon us here. All right, now let's take a look at the daily. Nice M-top formation. You can see that here. I would like to see more of a lower right shoulder, but that's fine. You know, even if you want to call it a double top, we have a neckline right here. Got back above the neckline on Friday, but we have confluence area of resistance from the 20, the 50, and the 200. Let's look for failure and then a target move to 127.17. All right, now let's take a look at the IWM weekly. We look at the weeklies on Monday, and I pretty much put them away, but I do look at them again on Wednesday. Don't show them to you guys because, again, we have short time here, but it's always good to take a look at them. Look what we got here, downtrend channel, downtrend line, all right, and we keep hitting it and failing. Also take a look at this. We're back above the neckline here, okay, but what do you have here, guys? If you look at it, just a very large, also big descending triangle here, okay? So break from here, measures here to here, you're going to get that move right around this area here, okay? So head and shoulders pattern, descending triangle pattern, still all valid on the weekly chart as well as the IWM. Daily, head and shoulders on the daily, and you could see it too on the IWM. You could see that, you could see here, oh, let me get rid of that. You could see as well that we have a real nice descending triangle too as well. And again, this area here, you take that from here, and then you project it, and that's where you're going to get your downside target. But again, we still need to break that neckline, which will come in right around here. You could see we did break below it, but we came back up. That's logical. It happens, not a problem. But again, let's let the price tell us that we are indeed moving lower. Lastly is the Qs. Qs just chopping around here. The whole Apple Buffett news, I think that's all a matter of retail buying it. I don't believe that you would get fund managers looking to buy that because Warren Buffett bought it, to be honest with you. But you could see here confluence area of resistance, the 20, the 50, the 200, right up above, sandwiching above it. So you could even call this here a sideways channel, if you will. But look at what's happening here. We're starting to roll back over on indicators. So keep a tough eye. I do want to mention that the semiconductor index, the SOX, did break out from the channel that I mentioned to you earlier this week. That's a good sign. AMAT came out with their earnings, and they actually had very good earnings. So if the semiconductors can get a hold of themselves and rally, and we can get some participation from the banks and financials, which would be hard to do if the yield continues to go lower. But if that does happen, maybe we don't sell off, and maybe we do rally. So remember, there's a lot of uncertainty out there. News does trump the charts. But I do believe that after a dismal earnings season, there's really not much to buy this market. Even if it were to go up to new highs, I would be more inclined to look to get a short off before I look to buy at new highs, especially the way earnings season which was dismal. All right, guys, just keep that in the back of your mind when you're trading. Have a great day, everybody. We'll speak to you tomorrow. Take care.